FTX just filed for Chapter 11 bankruptcy. Guys, this story just gets crazier and crazier. Let's just try and go over the insanity that was this week, okay? We've had over $100 billion wiped out from the entire crypto market cap and counting. And, you know, just when you think something is too big to fail, think again. Because flying too close to the sun and being a pathological liar and sociopath seems to be a common theme in the collapse of major crypto players just over the past year. So following in the footsteps of 3AC, Luna, Voyager, and Celsius before it, FTX, which was one of the biggest crypto exchanges in the world, is the latest to implode. Since my last video on it here, there's already been a lot of new developments to this insanity, and the latest of which is that after signing a LOI or letter of intent to acquire FTX, Binance said we're not doing it, you know, as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations. We have decided that we will not pursue the potential acquisition of FTX.com. We said in the beginning that our hope was to be able to support FTX customers to provide liquidity, but the issues are beyond our control or ability to help. So think about this. Binance is literally the world's biggest crypto exchange. At certain points, Reuters reported that they had about 60% of the entire market share. And they said, nope, we can't patch up the hole in FTX. That FTX hole is too big for us. So it makes you think, like, how big is this deficit that FTX is dealing with? So this is the tweet thread that SBF sent out yesterday, starting with, "I'm sorry, I effed up. I should have been communicating more." And then he proceeds to give an update on where things are. You know, he says, this is about FTX International because FTX US they're totally fine, you know? He's saying that the international version currently has a total market value higher than client deposits. Remember this as we move forward. Goes on to say, oh, I effed up not once, but twice. The first time, a poor internal labeling of bank-related accounts meant that I was substantially off on my sense of user's margin. I thought it was way lower. Let's pause for a second and think about it. This guy started Alameda Research, which is sort of like his trading desk investment firm arm, as well as an FTX exchange, doing tons of derivatives contracts and sophisticated algorithmic trading. And he wants us to believe that the mistake here was that he had a poor labeling of bank-related accounts. And they saw roughly 5 or 6 billion of withdrawals on Sunday, the largest by a huge margin. And so he says, I was off twice, that I wasn't communicating enough. And anyway, and he goes, I'm sorry. Anyways, right now, my number one priority is to do right by users, to take responsibility and do what I can. So we're spending the week doing everything we can to raise liquidity. They're trying to get a bailout at this point. Doesn't make any promises. And he's like, oh, there's a number of players that we're in talks with, LOIs, term sheets. We'll see how that ends up. And claims that every penny of money raised and existing collateral will go straight to users. Straight to users. And that investors old and new, and employees who fought for what's right in the career and who weren't responsible for any of the F-ups. And so what does this mean going forward? Not sure, but here are some things that I know. Number one, Alameda Research is winding down trading. And he claims they're not doing any of the weird things that he sees on Twitter, although doesn't have a good track record for telling the truth at this point. And second, in any scenario in which FTX continues operating, its first priority will be radical transparency, as close to on-chain transparency as it can. That's fantastic. And all the stakeholders would have a look at FTX governance, and that, you know, he'll step down if he's not wanted. And remember this part. He says this was about FTX International. FTX US was not financially impacted by the shit show. It's 100% liquid. Every user could fully withdraw, updates on its future coming. Keep that in mind. Remember that part as we go on to the next part of the story. And at the end, he gives one last jab. He says, at some point, I might have more to say about a particular sparring partner, so to speak, but you know, glass houses. So for now, all I'll say is, well played, you won. As if this was a game from the get-go and between two players, some sort of chess game, and not some mishandling and abuse of customer funds and blatant lying to millions of people that trusted him and his companies with their money. And if you go through the comment section, it is a glorious place to look right now because there's a lot of great memes for one, and a lot of the people aren't buying it. A lot of people in the space are saying, nope, you lied too many times. This is, and not only that, but they pointed out a screenshot where it says, I'm sorry, in the next tweet. Anyways, this is a textbook sociopath. And I think as an industry, we need to start recognizing these sort of personalities because they're very dangerous. And when somebody shows you who they are the first time, believe them. Don't give them the benefit of doubt. Just believe them. And one of my favorite comments that I think sums it up quite nicely in response is, you didn't F up, you frauded up. You commingled customer deposits to leverage your own trading. You donated their funds to politicians to line your pockets and curry favors, all while lobbying against DeFi. F off. And despite everything that he has tweeted and said and lied about, here's another one, lying to the face of US government.
Last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There is a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue to bring a lot of this.
Literally talking about other bad actors as if he wasn't doing the exact same thing. It's so infuriating to see this. CZ afterwards tweeted out, 2 big lessons. Never use a token you created as collateral. 2, don't borrow if you run a crypto business. Don't use capital efficiently. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt. Stay safe. Okay, so remember when SBF tweeted that FTX US was not involved? Literally a few hours after you tweeted that, breaking news, you can't make this up. FTX US says it may halt trading in a few days. Remember, days before FTX became insolvent, SBF was saying everything is fine. We're liquid, we're totally fine. It's just a competitor trying to, spread rumors about us. And literally the next day it goes down. And we've seen this again and again. I don't know why people keep believing these pathological, lying sociopaths. Shinsky from Celsius said the exact same thing the day before it went down. Do Kwon of Luna said the exact same sentiment the day before Luna collapsed. And today it came out that a lot of companies are actually exposed to his companies, Alameda, FTX, FTX US, and FTX Ventures. You got 3 commas, Anchorage, cryptocurrencies.ai, Lido, Impossible Finance, Masari, Maps.me, Reef Finance, Polygon, Solana, Voyager. And then you got other companies supposedly exposed as well. You have Blockfolio, you have LedgerX, Voyager again, Circle, which issues the USDC coin, PlayUp, Sky Mavis, Ledger Prime, BlockFi again to FTX US. And then you have other ones like the new blockchain Aptos, Layer Zero Labs, Masari, Mina, Paragraph, Yuga Labs, the creator of Bored Ape Yacht Club, the most popular and successful NFTs in the market today. Although Gordon Garner, one of the founders of the Bored Ape Yacht Club and Yuga Labs, said that claims that they were not affected and they never used FTX International, but that they did have some money on FTX US, which has been moved out earlier this week. Okay, so here's the thing. Both FTX and FTX US filed for bankruptcy. So somehow we went from fine to someone's bailing us out to no one's bailing us out to we're 6-ish billion in the hole to now we're 50 billion in the hole. The number that they're trying to raise keeps going up, and it makes you wonder where the ceiling actually is. As of yesterday, it was FTX looks for 9.4 billion in rescue funds, while the Bahamas, where it's headquartered in, freezes some of their assets. Now it's coming out that FTX reportedly used $10 billion of customer funds to prop up its owner's trading firm, Alameda Research. They reportedly lent over half of its customer funds to Alameda, who then used them to bet on other cryptocurrencies and buy out other struggling crypto firms to weather an overall downturn in the market. Now, meanwhile, in between, this is just FTX International. FTX US is fine. You can still withdraw. To a few hours later, FTX US has stopped withdrawals. To now, both FTX and FTX US file for US bankruptcy. So this is Chapter 11, which basically means that provides for reorganization, usually involving a corporation or partnership. A Chapter 11 debtor usually proposes a plan to help keep its business alive and pay creditors over time. So Enron's liquidator to oversee FTX's massive crypto bankruptcy. If we back up a little to see how we ended up here, this all started out with a CoinDesk article that called Alameda's balance sheet into question, saying that much of it was made up of FTT, the token that was printed out of thin air by its sister company FTX. So this turned into a real problem when CZ, the CEO of Binance, announced plans to liquidate the billions of FTT that they held. And since then, it has all gone into a downward spiral, and the contagion will continue to spread because of all the companies that have exposure to FTX and Alameda. Employees at FTX US are reportedly trying to sell off some of the company's assets, including the naming rights to a stadium in Miami. Oh yeah, there was that too. And it's come out yesterday that SBF's cabal of roommates in the Bahamas ran his crypto empire. The whole operation was run by a gang of kids in the Bahamas. A person familiar with the matter told CoinDesk. Many are former co-workers from a quantitative trading firm, Jane Street. Others he met at MIT, his alma mater. And all 10 are, or used to be, paired up in romantic relationships with each other just when you thought the story couldn't get any better. This includes Alameda's CEO, Caroline Ellison, whose firm played a central role in the company's collapse and who, at times, has dated SBF, said people familiar with the matter. CoinDesk spoke to several current and former FTX and Alameda employees who agreed to talk on the condition of anonymity, citing ongoing harassment and death threats due to the exchange's solvency issues. And they said essentially this: it's a place full of conflicts of interest, nepotism, and lack of oversight. Some employees kept their life savings on FTX, said the second anonymous employee. We trusted that everything was fine. I mean, this is a really, really tragic event. Nobody wins in this case. It's about the millions of customers that have been affected and the billions and billions of funds that have been misused and essentially stolen. Overall, is a huge lose-lose for everyone in the crypto space because it's a major setback for the industry. I think right now, it's fair to say that SBF is the most hated person in crypto. As Elliot Trades puts it, you've hurt more people than almost anyone in financial history, but what's worse, your crimes may trigger horrific legislation that may block the innovative financial services from reaching those who need it the most. From the bottom of my heart, F you. And I think he really nails that. If you've been affected or trying to withdraw still, Elio Trades tweeted that he just helped a family member withdraw from FTX US, said that USDC is almost immediate, but that ETH is delayed. So maybe USDC is the easiest and fastest way out as of now. So those are all of the updates that have happened as of recording right now. And I'm just going to be putting this video out because I know things are going to get crazier. You know, at this point in time, just take a deep breath, go outside, try not to think about it if you can't do anything about it at this point. If you've already tried to initiate funds, that's it for this video. Thanks for watching, and I hope you have a good weekend.